it just to double check. All right. Are we live at the Bimpy now? Hello, everyone. We're just going to wait for a few more minutes until more people join and then get started. Thank you for joining us today. I guess we can start at the 5-minute mark if it's okay with everyone. Three more minutes and then the excitement can begin. Thank you, everyone, for holding a bit. Hey, Amy, just saw your question. We're starting now, actually, so a very timely question indeed. Um, Hi, everyone. Welcome to today's webinar, Built Different, Africa Leading the Stablecoin Shift. The webinar is hosted by the Africa Fintech Network and Ripple. Today's webinar and panel aims to examine the African continent's leadership on stablecoin adoption and how the markets continue to experiment with stablecoins, and the fact that they seem to be a clear and present reality in the African market, and a market that's mobile money friendly and digital money ready, probably before most markets in the world were. We will explore adoption briefly. We are joined by a panel of experts, including Dr. Koponda, Reese Merrick, and hopefully soon GB from Flutterwave, the CEO of Flutterwave. We will look at the commercial impact of stablecoins and the regulatory frameworks developing across African jurisdictions, especially in places like South Africa, Kenya, Nigeria, Mauritius, and Ghana. The idea is to discuss their role in remittance, in trade, and generally financial services. Before we start, though, just double check with Adebimpe. Has Dr. Sagoon been able to join?
He's joining now.
Okay, so we'll wait a minute. We're being joined by Dr. Sagoon Aina, who's the president of the Africa FinTech Network, who will present the opening remarks. Equally, we can all use this time to prepare a lot of questions. I'm lucky today, I'm only the moderator, so I'm not pressed to answer any questions, but we've got three very good experts, so feel free to press them as much as you can and benefit from their experience. We're very lucky to have them. And I should point out at the start, Dr. Kaponda is coming off a cold, so he hopefully we appreciate the fact that he's putting all this effort to join us today. And hopefully he won't strain his voice too much. We don't want him to go fully silent tomorrow. So thank you very much, Dr. Kaponda.
I really appreciate it. We'll be good, Abdullah. We'll be fine. Thank you.
All right. So I think while we wait for Dr. Segun, what we could do is jump to the presentation section of today's session, just so that we're moving things forward. Briefly, I'll introduce Ripple briefly. Ripple is a company that was built to enable the world to move value like information moves today. We are aiming to create the Internet of Value with a heavy reliance on blockchain and crypto technology. We build breakthrough crypto solutions for a world without economic borders. And nowhere does that seem to resonate more so than in Africa. Our services aim to help institutions store, exchange, and move value through different products that we offer. Recently, since the launch of RLUSD, our enterprise-grade dollar-backed stablecoin, we've had a lot more visibility on how stablecoin utility grows across the world and in Africa also. We've been working with partners across the continent, namely Flutterwave, Yellowcard, Valor, and others, in order to study how the utility continues to grow. And we're recently publishing, in the process of publishing, position paper or a white paper or what have you on this utility, which we will aim to share with the attendees after today's session. But briefly, to set the scene for today's session, we're looking at a real-world asset that has seen its value, the value of stablecoins traded has increased from 1.2 trillion to 3.1 trillion in 2025, and stablecoin transaction volumes excluding trading activities are still at $1 trillion, because they're not only being used for trading, they're being used for cross-border payments, for 24 settlement of across financial services. They enable instant movement of money. And that's been the true utility of these stable coins. Across Africa in specific, we've seen massive adoption. And this is primarily because of inefficiencies in legacy systems that could benefit from the efficiencies of stable coins. The problem briefly is it's just expensive to send money into sub-Saharan Africa. If you're sending $200 into sub-Saharan Africa, the cost of that on average is around 8%. So you're immediately losing $16. That just doesn't cut it today in today's world. Liquidity continues to be a big issue, a lingering issue for businesses in Africa, with an annual estimated loss of $5 billion because of that strain on liquidity. And I think this was a very eye-opening statistic for me to find out. Even intra-African payments, when it comes to that, only 12% are processed on the continent. Most intra-African payments will still have to have a leg outside of the continent at some point. So this has led to the carving of a special role for stablecoins. Across the continent, they're being used increasingly to enable trade, to enable remittance. They provide access to a dollar-denominated value on par with the dollar, providing a very sort of good relief for these liquidity constraints we've discussed without having to hoard dollars in order for a rainy day. They're available, they're instant. You could get access to a dollar-denominated asset immediately. And they're driven by the necessity for financial stability and for financial inclusion across the continent. And the integration is real. Globally, they have stablecoins have reached a $300 billion market cap. In Africa in specific, 80% of respondents who were surveyed recently in Nigeria and South Africa have said that they hold stablecoins in some form. And if we look at the greater crypto transaction volumes across Africa, 43% of those in 2025 were settled in stablecoins. And I hazard that they will increase in 2026. So what are these stablecoins being used for? They are being used for trade. Simply put, and this is a fact that's agnostic of crypto or stablecoins, 56% of the world's reserves are still held in dollars, and 50% of all invoicing happens in dollars. So businesses in Africa are benefiting from access to a dollar asset in order to be able to settle their invoices quite simply. The African continent receives over $100 billion in remittance in 2023. I think what I found very interesting is in 2024 or 2025, and feel free to correct me if I'm wrong, remittance surpassed agricultural exports in Kenya as the primary source contributor to GDP. And this continues to be the case across Africa, across a lot of African countries, not all countries. And then finally, tokenization remains a big potential across the continent. The continent has vast reserves of real-world assets that have historically faced a challenge when it comes to getting liquidity. Tokenization democratizes this access to investment, this access to new capital. And I'm sure we'll touch on this later on with the panel. But what does this mean from a practical perspective? Regulators are moving. We've seen it happen in Nigeria. We've seen it happen, well, more recently in Nigeria, but we've seen it happen in South Africa, Mauritius, Kenya, Ghana. And simply put, it's our view that stablecoins offer a net supervisory gain, and they are something that regulators must contend with. The reason we say they offer net supervisory gain is because the data from blockchain is very hard to mask. And I mean, I always use this example. It's very hard for a regulator to estimate the amount of fiat money circulating in their economy. It's a lot easier for a regulator to get a good estimate of the amount of fiat denominated stablecoins circulating in their economy. The on-chain analytics do not lie. What that offers is it offers forward-thinking regulators the opportunity to regulate in a more nuanced fashion than they have historically. It changes the way they have to approach capital controls, and it changes the way they have to look at monetary policy, quite frankly. And we're seeing more and more regulators contend with that in Africa and beyond Africa. And then what's helping a lot is this global convergence on regulation. We know what the basic elements of a good stablecoin are. Reserve are highly liquid, safe reserve assets, a good custody of these reserve assets, the redeemability on par of these reserve of a stablecoin against the currency it's set against. And more regulators understand where they need to start looking at stablecoins when they start their regulatory journey. And then we also, what that has amounted to, this utility combined with this regulatory must be is stemming from the fact that consumers are using it, institutions are using it. At the core, regulators are meant to protect consumers. This is why regulation must happen now. what we continue to see is that the lack of regulation has not stopped the adoption of stablecoins. In fact, it's just increased it. Regulation is not there to decrease the adoption. In fact, it's there to organize it, to mitigate any risks, and to make sure that everyone is on the same page. And then finally, and most importantly, I think one of the biggest challenges with foreign denominated stablecoins in several African jurisdictions is their influence on monetary sovereignty and monetary policy. And what we at Ripple constantly campaign for is a comprehensive stablecoin regulation that looks at foreign stablecoins, but equally at the issuance of local stablecoins, will allow for them to exist together, will allow for the interplay between the foreign and local stablecoins, and offer a more efficient on-chain economy that also creates enhanced utility for the local stablecoin so that monetary sovereignty is safeguarded. Which brings us back to the simple imperative. Regulation is a must, cannot be avoided, and we're very happy to see more and more regulators take, especially in across African jurisdiction, take steps towards that. Before I jump to our panel, I want to ask, is Dr. Segun online at Abimpe?
Not yet, please.
Okay. Perfect. Sorry, I'm just going to check on one other panelist and then we'll start our panel if that's okay. Super. So we will be joined by GB very soon, but just to introduce our expert panel for today. Firstly, we're joined by Dr. Kombe Kaponda, Dr. Engineer Kombe Kaponda, who is a leading central bank technology expert and in more emerging technologies and fintech researcher with 20 years of experience. He is a leading voice on ICT infrastructure, payments, systems innovation, emerging technology, and financial inclusion. He's an active participant in the World Bank's in the IMF World Bank Technology Community of Practice in AI and CBDC technology, which is a private and informal community focusing on payments, efficiency, R&D, and research about CBDC technology for mutual global learning. He has also served on the ITU, the International Telecommunication Union Architecture Interoperability Committee, Taxonomy on CBDC, Digital Currency Ecosystem Global Initiatives Working Group, and he has led several implementation digital transformations for the banking sector, focusing on driving the central bank modernization through the strategic adoption of digital technology. We're also joined by Rees Merrick. Rees is the Ripple's Managing Director for the Middle East and Africa, leading the company's business operations and strategic initiatives. Prior to his current role, Rees was a Senior Director of Global Strategic Partnerships at Ripple, where he worked closely with key financial institutions and crypto partners. Rees brings over 2 decades of experience working within the fintech and payments industry, with expertise focused on foreign exchange risk management and building best-in-class payment solutions for large financial institutions. And hopefully soon, just so that we don't interrupt the panel later, we'll be joined by Olubunga Agbola GB, who is the CEO of Flutterwave and the founder of Flutterwave. He is a visionary technology leader and institutional builder, and he's Africa's leading payment and he's the CEO of Africa's leading payment and technology company. With over 2 decades of experience spanning Africa, Europe, and the US, GB has built and governed mission-critical systems that power digital commerce, and he's joined us right in time. Hello, GB. How are you? We're just doing the introduction for you, so perfect timing. GB has built and governed mission-critical systems that power digital commerce, financial inclusion, and cross-border trade at scale. GB's career is defined by sustained focus on enterprise payment and infrastructure. And without further ado, I think we can get started on the panel. Rees, since I know you the most, I'll start off with you, and I'll get you to kick things off for us with just a question about the global payment infrastructure. particularly on cross-border payments, which remains one of the most persistent inefficiencies in the global financial system. From your experience, having worked at the intersection of payments and now having spent over half a decade in digital assets, where do you see the biggest structural gaps? Can stablecoins begin to address some of these inefficiencies?
Firstly, thank you, Abdallah, and thank you for the African Fintech Network for putting this together. So I think when we look at the global payment system, we have to acknowledge that it definitely still remains structurally fragmented, and this is by design. So we're still relying quite heavily on corresponding banking relationships, which add layers of cost, long delays, total lack of transparency in every cross-border transaction that occurs today. And as a result, the human and economic costs, are significant. And as you mentioned earlier, Abdallah, the consumers in emerging markets, bear the heaviest burden. So, sending a payment out of sub-Saharan Africa, 6 to 8% is crazy in terms of those fees. It gets even higher when you're looking to send a payment between intra-Africa. So corridors like South Africa to Angola, the friction and the cost can go anywhere between 15 and 25%. So, that's kind of outrageous as we kind of look at where we are today. So I think as a business, my view is, through the lens of three core structural gaps. And first, I would say is, as I've mentioned, it's a completely fragmented clearing infrastructure that essentially doesn't natively allow different regions to talk to one another. I think secondly, there's a severe USD liquidity constraints, which ultimately leads to tons of trapped capital. Very costly for institutions. I think somewhere in the region of up to $5 billion is kind of wasted just on those funds just being parked globally, just to ensure there's liquidity in place. And then thirdly, and it's something that we're seeing more often, is the aggressive de-risking by global correspondent banks, which is actively severing financial access to entire regions. So when you look at you look at that, and I think this is precisely where enterprise grade stablecoins really shift from speculative narrative into a critical infrastructure tool. And they directly address the three gaps. If you think they offer near instant 24/7 settlement, on blockchain rails, giving the ability for people to treasury management from an expensive pre-funded model to just-in-time liquidity model. So in the market, I think what we're seeing is stablecoin payments no longer a future concept. I think that it's probably one of the most proven, scalable, real-world kind of use cases for digital assets. And at Ripple, our focus has always been, how can we combine, experience in global payments, and have coverage, but with that have absolute regulatory rigor. And a prime example of this is RLUSD, which is Ripple's USD-backed stablecoin, and fast becoming the fastest growing institutional stablecoin globally there. And really, we leverage that from our own product. We built a payment product, done over $100 billion in transactions. And ultimately, we see that RLUSD is kind of an extension to that because we're seeing such demand there. So I think, the future of global liquidity isn't about waiting days for a wire to clear. I think it's, about deploying compliant, multi-asset infrastructure. And that's really what we're building for here at Ripple.
Thank you, Reese. Super helpful. GB, if I could switch over to you, I think Flutterway's stablecoins continue to be adopted en masse across Africa, and Flutterwave has been a key player in that growth. You've done a lot to be operational, to actually put stablecoins against the test of utility. Could you let us know a bit more about what the operational realities and challenges of addressing this growing demand are like, and to what extent has that growth been organic across the continent?
Thank you so much. Great to be here. So just to dive in really quickly, Flutterwave is 10 years old today as a company, and our infrastructure has been built around, scaling fiat payment across Africa, right? We're the most licensed non-bank fintech in Africa right now, until earlier this year when we got our first banking license in Nigeria, all right? Now, where am I going with this? We've been doing on-ramping, off-ramping for a while, all right? But we're seeing a major shift in SMB and B2B payment across Africa right now. We're seeing SMB merchants who are importing from outside Africa, getting their suppliers saying, hey, do you want to pay us in stablecoins? Do you want to pay us do you have RLUSD, right? We're getting those questions now, which was very, very unusual before. Then we move to a point where B2B merchants, want to get paid after they've gotten their collections from Africa, then they're thinking about how will they get the money quickly. If you send money out on a Friday evening via Swift, as you probably know, that money will get there maybe on Monday or Tuesday if you're lucky, right? That is the difference of stablecoin. And that is what we're seeing as demand in the market. We're seeing merchants, SMBs, and large corporates actually demand for how to move money faster and yet in a compliant manner. If you get what I'm saying. So the point now is, how do you help? How do you, as a compliance payment platform, incorporate stablecoins into our network to enable these use cases to work for our merchant across multiple ecosystems? And that's the design that we have. So in the last couple of months now, we've built what I think is the largest stablecoin implementation on the continent for our consumer business, for our enterprise business, for our SMBs as well. And the goal really is making it easier for them to pay and get paid, right? At the end of the day, an SMB merchant who is importing from the US or from Singapore or from Hong Kong, they just want to they want to pay their supplier quicker and faster, right? That's what they're trying to do. So that's what we see on the platform. We see merchants, we see SMBs, we see large corporates who are actually trying to make it easier for payment to work for them. And that's what we've built with our stablecoin infrastructure. Now, with Ripple USD on our platform, it is so seamless for any business to go to our platform. They get in there, they see the Ripple USD infrastructure. They can move from fiat to stablecoin very simply and back. Now, paying a supplier anywhere in the world becomes so simple and so easy due to this infrastructure that we build with Ripple right now in our platform.
Thank you, Jimmy. Very clear. And thank you for making the conversation very practical also. There's realities that we're contending with. Dr. Kaponda, if I could switch over to you. We've talked a bit about the stablecoin adoption across the continent. What, in your opinion, has driven that adoption, and what can you expect for the future of stablecoins across these key sort of epicenters across Africa, the Nigerias, Kenya, South Africas?
Thank you very, very much, Abdullah, and I think thanks for the Faris and Alebi for setting the scene. But looking at it from a monetary authority's point of view, and I think everybody appreciates that monetary authorities are by nature knowledge institutions. So they'll look at the last 2 decades. They'll look back at the 2008 global financial crisis. They'll look at October 2008 when the Bitcoin white paper was released. They'll look at how events unfolded. They'll look at how Libra came in 2019. They'll look at how Libra became Dime. They'll look at how regulators looked at how these efficient payments would be made safe for everybody. Like I said, monetary authorities in their DNAs talk about stability. They talk about like you mentioned, there has to be consumer protection. So the biggest asset is you want modernized payments, you want efficient payments. You don't want a payment sent on Friday to reach on a Monday, but you want that stability and you want the consumer to be protected. And I think that's overall what these monetary authorities are looking at. But ultimately, if you look at now, what has driven these stablecoins, and I'll answer it in 3 words. I'll look at what has driven them, how they've been driven, and what's happening now. the use cases that have been presented by my colleagues. And ultimately, if you look at, the what is, if you take it back and look at virtual assets, issues of money and the properties of money, the medium of exchange, medium of count, and you want stability there. So the biggest issue that has been for monetary authorities is that volatility. Stablecoins has in some way solved that, and that's a good way. So look at all the emerging technologies, look at the blockchain, look at the non-immutability, look at consensus, and look at transactions settling in record time. That's all very good. So we're bringing efficiency in payment systems modernization, and you want that end-to-end transaction to be efficient, to be stable. Issues of volatility have been resolved by a stablecoin, which is excellent. So now you have, you have pegged that in a basket of currencies or is it commodities, and you want that value, even when I trade today, to be the same value. You don't want that volatility. So that is the what mostly, and in terms of monetary authorities, that's what most of them are looking at. How do you stabilize that? How do you make sure the end consumer is protected? How do you ensure there's efficient trade? I remember the statistics that have been that you brought up from the paper. You're talking about intra-Africa trade from 12 to 15%. That has to change, because you want more trade within regions, and you want those remittances costs to be brought down. How can that happen? That can only happen if there's efficient payments. But ultimately, you want, even as you're trading, both with high value payments, low value payments, all those to be secure. Globally and in the region, mostly in sub-Saharan Africa, lately we've been talking about fast payments. How do we move payments efficiently? How do we have, interoperable fast payments? And everybody now is talking about value moving instantly. Remember, earlier was referring to a SWIFT payment, which takes more than 48 hours to settle. But you want that instant trade. That instant trade has to be stable, end-to-end settlement, and stability. I think with most jurisdictions, we've seen all that now unfolds. Like I said, the DNA of every monetary authority is sound payments, stability, secure payments, and now with cyber, the highest ranking risk, you want that transaction to move and settle efficiently without a man in the middle disturbing that. And I think globally and in sub-Saharan Africa, that's what monetary authorities have been looking at. If I refer back to 2008 global financial crisis, that crisis was not just financial service providers. It was a combination of securities exchange, pension, who's looking at consumer protection. And I think we've seen now, if you're doing financial stability boards across the globe now have to look at all those landscapes. Look at what's happening with financial services. Look at what's happening with the property markets. Look at what's happening with securities and exchange. Look at pensions, and put all that together. And for you to have stability in a region, how would volatility in one region affect one region, and think, how do you avoid that? So at a higher level, that's the stability we're talking about. Bring it back to stablecoins. Volatility issues have been dealt with. The how, the when is now. We have seen, transactions on stablecoins. So I think that's good. And the end-to-end finality is what's important. And now jurisdictions are looking at if we have to come up with guidelines, because now if you ban an emerging technology, you're not doing it any favor. And I think very few jurisdictions still have outright bans. We've seen a shift towards, guidelines, towards financial literacy, digital financial literacy. You want people to use these goods, products, and services safely, efficiently, but also have an understanding, of how this transaction moves. And most jurisdictions now are putting emphasis on, how do we have these, as we push for financial inclusion, we want everybody else to use these financial instruments, but how do they use them securely? How do we build financial literacy issues? And how do we make sure, that stability of these very important real-time systems that are interoperable is enhanced? So at a higher level, almost all jurisdictions, sub-Saharan Africa, have looked at volatility and how that has been resolved. The double spending problem has been resolved. Remittances, you want to reduce all those statistics and make sure end-to-end finality is reached in record time. You want everybody to use these services and trade. You want intra-Africa trade, you want inter-government trade, but you want even, fast payments in terms of remittances. For me to buy a basic good and service, it has to be instant. Like you mentioned, mobile financial services, mobile money, has changed the African jurisdiction. I think we are now looking at it and now encouraging everybody to build products and services that are innovative and ultimately, make sure everybody is included. But I want to make one point, and I'll come back to it later. If we look at mobile financial services, mobile money, it's pretty much an e-money issuer who have an account in a commercial bank that is regulated, that is backing, that's stability. That's what you want when you're backing that stablecoin. So if you look at it broadly, and the research we're doing now is that mobile financial services and mobile money can be likened to a stablecoin because we are pegging it to a fiat and just jurisdiction in that commercial bank. And then in terms of volatility, you want those funds not to be commingled with anything else. You want those funds to be, earmarked for those customers that are investing in mobile financial services. And if there's volatility, that value still is retained, and the consumer can be protected. And now I'll end there, and I think I'll build on stable coins, mobile financial services, and how we can innovate around that and enhance that stability. Thank you.
Thank you, Doctor. This was a great journey through the importance of stability, all the way from issuance to the finality of settlement and creating that sort of certainty around stablecoins. On that, I think if I may get back to you, Reese, speaking of that certainty, we've seen more institutions willing to, I wouldn't say experiment, but to lean into stablecoin technology. And in your view, what has played a role in accelerating that institutional adoption of blockchain technology and stablecoins across institutions? And beyond remittance, what are some of the emerging use cases you believe could cement the long-term value proposition of stablecoins?
Thanks, Abdallah. Yeah, I think we're clearly seeing stablecoins, breaking out from purely retail and being actively adopted by traditional finance. I think stablecoin brings the benefits of crypto. Super fast, low cost settlements, scalable, to TradFi in a secure and stable manner, which allows them to utilize for kind of payments and collateralization. I think just following on, I guess, from what kind of GB said, from where I sit, if we look beyond remittances, I think it's clear that corporates will unlock the next wave of adoption. Boards and CEOs are asking their CFOs, how are they implementing stablecoins? And, we hear this every day. Ripple Treasury, facilitates movement of $13 trillion a year. And these are customers ranging from medium-sized corporates to Fortune 50 companies. And the conversation has fundamentally changed there. It's shifted from, what is this, to how do we implement this now? What I would say is the growth is coming, but we're still very early. If we look at some figures over the years, as it relates to B2B payments, early 2023, I think it was negligible, 100 million per month. I think last year, the figure is closer and in excess of $3 billion per month. So, we're seeing a lot of growth. If you look at the global B2B cross-border transaction market, I think it sits at, between 33 and 40 trillion dollars So we've got a long way to go, but I think certainly we're seeing that growth there. I think as it relates to Africa specifically, and some stats that you kind of mentioned, but I'll echo one as well. I think 50% of all commercial payments leaving Africa are made in dollars, US dollars. From that 50% of payments that are leaving Africa, only 20% of those payments are actually going to the US itself. So what you actually see is you have just over 80% of those US dollar transactions originating in Africa in US dollars are actually sitting in beneficiaries outside of the US, which actually a lot of those are intra-Africa, as we quite rightly said. So, you look at it, how it works today, if you're in business in Nigeria and you want to pay a supplier in Kenya, the banking infrastructure is not connected at all between Nigerian Naira directly to Kenyan shillings. So what you see is you find that the Naira will be converted to dollars. The dollars are sent to the Bank of New York. Each process takes time, it costs money, and then it comes back and it's converted into Kenyan shilling, and that payment is made. So this just doesn't serve the needs of corporates today. And we see, and as GB mentioned, like getting access to a USD backed stablecoin like RLUSD on the XRP ledger, you can move settlement time to from 1 to 5 days, sometimes longer, to near instant. You can settle payments 24/7, 365 days a year. And it costs a significant amount less than it would be through traditional methods. So, we're seeing a ton of interest and adoption here across Africa and beyond. And, because ultimately they're solving, a real pain point that exists today. So, yeah, it's optimistic on the corporate flow.
Thank you, Reese. Very clear. And on the note of institution adoption, the key driver, and you've touched on this, Dr. Kabonda, is regulatory clarity. GB, if I could get back to you, Flutterwave was one of 5 companies, I think, to participate in the Central Bank of Nigeria's Reg Sandbox. From your perspective as an entity, I mean, you mentioned this, you've got, I think, the largest amount of licenses for a non-banking player on the continent, probably beyond. You've got licenses beyond the continent, I mean. What role does regulatory support and clarity play in helping the sector grow and helping improve adoption?
Thank you so much. So we believe in scaling compliance first as a company. That might mean could be slow sometimes, but we prefer to be slow and be here for a longer period than anything else, right? To be very frank, the regulatory support we've gotten from African regulators has been really incredible, right? We've got the Nigerian Central Bank, for example, really investing in infrastructure for stablecoins, right? I'm trying to understand it very well and supporting that, and actually having an open door environment to how we can scale that, especially regarding how we can bring in more FDI into Nigeria, for example, with stablecoin. And stablecoin is just another form factor of payment, in my opinion, right? We want to drive more FX inflow into Nigeria. Stablecoin can provide some of that, so why not, right? So they've been very supportive from that perspective. Stablecoin as a remittance use case as a payment tool, right? Same goes for Ghana as well. They've built an amazing sandbox infrastructure, which some of our partners are in. South Africa is also, open. So there's a lot of massive clarity, and we are one of the few guys across the continent that is in almost all of these sandboxes, and being a partner with the regulator to get this out there. And that's very, very key. So the clarity is available here. There's no ambiguity around here at all. There's a lot of questions that are being answered in real time. They're understanding the ecosystem, they are supporting it, and they are trying to obviously ensure that whatever is happening, consumer trust is not broken, ecosystem is protected, consumer monies are in the right place, and people are doing what they're supposed to do the way they should do it. And that, I think, is very, very key. So the Central Bank across Africa, they've been pretty innovative around this, if you ask me.
Thank you very much, GB. Very clear. Dr. Kaponda, following up on the question we just had, you're sitting on the opposite side of the spectrum. You work within the central bank. You are a regulator yourself. What are some of the primary challenges, but equally opportunities? Like if you were to list the top two challenges, top two opportunities that regulators have to contend with when it comes to oversight over stablecoins.
Brilliant. And I think that's a brilliant question. And overall, monetary authorities now, remember, like I said in my opening remarks, almost none of them now are burning the use of these emerging technologies, virtual assets, and they're encouraging them. And the reason is simple, because you want to concentrate on the opportunities. Remember what we said, central banks want to make sure we have stable, sound payments. What are the opportunities there? You want that end-to-end transaction to reach finality as quickly as possible. Like GB was saying, a case for West Africa, CBN taking advantage of stablecoins to allow for remittances to come in. Because ultimately, as a central bank, if you're building your national reserves, and like I said, most national reserves are either in assets such as gold or USD, you'd want your population in the diaspora, to send money back home. And you can use some of that for financial stability in those reserves. So those avenues are important. But the focus for most monetary authorities is on opportunities. Challenges will always be there. Remember, even in the earliest form of movement of value during the barter system, challenges were there. Sub-Saharan Africa, Southern Africa, if I'm trading my grain with a goat, challenges were always there. I have to move that goat, take it to where the grain is, make sure the goat doesn't eat the grain, and we do the trade. Same with modern day payment systems. Challenges are always there. But I think it's taking advantage of opportunities. And as we come up with the guidelines and the regulations that guide these virtual assets and stablecoins, you want them to be done in a playground that has been tested. GB was mentioning regulatory sandboxes. We've seen that model work across most jurisdictions. It's now taking these financial platforms that are innovative, that have never been used before, but you want to be mindful of the risks. So it's risk-based. You take it into a playground, which is a sandbox, try it in a limited number of people, see how that works. You look at the risks and say, if this works and we can mitigate the risks this way, then we can roll it out onto a large-scale financial innovation that the mass can use. So the opportunities are there. You want to test it in an environment that's secure, like a sandbox, and ultimately make sure your consumer is protected, then roll it out as normal financial services. Like I said, B2B payments, P2P payments have to be stable and secure. On a P2P, if I'm doing a mobile transaction, and this is common day life, I want to buy bread. I should be able to go to the shop. I've got my 2G feature phone. I put in the basic model of a transaction on USSD code, *221, and I get my commodity instantly, and life goes on. Same with other services. If I want to now pay for utility, pay for electricity, pay for a water bill, coupled with that now, innovation. We innovate on that now, allow for insurance products. Africa predominantly, you find that most GDP contributions are coming from agriculture. How do I get my agriculture insurance on mobile? Infrastructure sometimes is a challenge. I remember GB was mentioning initiatives by the Central Bank of Nigeria to make sure the infrastructure is there, the rails are there. And now, globally and in Africa, we're talking about digital public infrastructure, where you want governments, private sector to come together and build those rails, where you want general citizen services to work there, you want payments to work there, you want ID to work there. That way, the whole ecosystem grows. So as we look at opportunities for stablecoins, like I said earlier, issues of volatility, that is sorted out. What opportunities do we take? You look at your B2B on Swift, taking that 48 hours. Can you do that in a more secure way? A stablecoin is an option. So we find that now the opportunities are there. Central banks are open to those opportunities, bringing up safe playing fields like sandboxes, test, manage the risk, and draw them out as financial services. But ultimately, you want to make sure those transactions are protected. That's where now you find issues of you want to know who's transacting, your KYC. I know tokenization is big now, and I think most payment system provider would want that information to be tokenized. It's easier because if you tokenize, you've already dealt with the highest risk in financial services, which is cyber. If you hack my token, what value will it give you? If you hack my KYC information, you know where I live, you know my ID, and you can do so many things apart from there. So central banks are taking all that on, manage the risks, embrace the emerging technologies such as stablecoins and tokenization, and make sure we provide those secure, stable, and reliable payments. Thank you.
Thank you, Doctor. And you touched on this, you touched on tokenization as a driver for adoption. Reese, we've had a lot of conversations around tokenization, how financial markets can change and the way they operate globally. There's a lot of projections out there that could reach tokenized assets could reach $16 trillion in value by 2030. And there's more optimistic and less optimistic estimates there, but they all estimate a lot of adoption, quite frankly. What is the specific potential you see for tokenization, and how might stablecoins serve as a catalyst for that growth?
Thank you, Abdallah. I think what's happening is definitely the financial markets. We're not in a cycle. We're in a big structural shift here, and what we're seeing certainly across our business is that institutions, as it relates to tokenizations, are no longer asking whether to engage, but the question is how and what to tokenize and so on. So, they're asking us the questions. They're looking at how they can implement digital asset strategies as it relates to tokenization. But the process of creating a digital version of a traditional asset and putting it on the blockchain, you can't have that unless you have a new form of money to go with it. And right now, as kind of the way we look at it, stable coins are the only viable option for on-chain settlement as it relates to interacting with tokenizations. You think they serve as the digital cash, taking settlement in some regions T+1, T+2 to instantaneous settlement. So if you think of tokenization, that's an absolute game changer. With a stable coin, a transaction can be settled the moment it's confirmed on the blockchain. The tokenized asset moves to the buyer's wallet, and at the same time the stable coin moves to the sellers. So this instant atomic settlement process eliminates counterparty risk, which we know has been a major bottleneck as it relates to tokenization in the traditional world. I think if we look at African financial markets specifically, I think historically faced an uphill battle when it comes to liquidity. So they stand to gain significantly from this. And on Ripple's side, we're keen to play a role in helping them achieve that. I think crucially, tokenization democratizes access by breaking down, those high barriers that exist when it comes to being able to now have fractional ownership, allowing everyday individuals to, across Africa and the globe to participate in, wealth building opportunities. So, I think we're certainly at the starting point. The numbers that are forecasted are significant. But I do think that the African continent has a big part to benefit from that.
Thank you, Reese. Thank you very much. And on the subject of the African continent, if I could ask you another question, with Flutterwave, you work with a lot of businesses, with a lot of fintechs to improve their efficiencies. But there's a basic fact, which is Africa has a very robust fintech scene. How did that fintech scene respond to stable coins? And is the fact that African businesses in general are a lot more digital ready than a lot of other businesses, been a key driver for Flutterwave's success?
So by definition, we are built to be resilient, all right? Because obviously we have a lot of infrastructural deficits as in so many areas, and we're solving them as we go. The average African business thinks about a lot more than their actual business to run their business, because you have to pretty much, build everything for yourself. So we're built that way, from the get-go. That said, we've seen that, you know, the lack of credit infrastructure, for example, for a lot of SMB trades or consumer payment is what drove real-time payments in Africa, right? If I pay you right now, I need the money right now. I can't wait till tomorrow because I have nowhere else to pay. So naturally, you build real-time payment systems, right? That's why in M-Pesa in Kenya, with the NIPS in Nigeria, MTN Momo in Ghana, Airtel Money, it's all real-time payments. We know the problem we're solving for in our market. We have to build around that. Naturally, as well, now we're not in the stablecoin era where the same way Africa leapfrog, in my opinion, landline, went from no phone to mobile phone. The same way I see us leapfrogging Swift payments, going from mobile payment to stablecoin, right? That will happen naturally because we can see it makes sense to an average African to say a stablecoin wallet. We're used to wallet phone numbers already as account numbers, right? So for us in Africa, form factor of payment does not have to be an account number. It could be your phone number. It could be an email. It could be anything because we're used to money moving at the speed of light. Anyway, so stablecoin naturally coming to that ecosystem makes sense, right? I'm able to pay. In fact, most people wonder why you wire money to a merchant or to a supplier. It takes 2 days through Swift. Why not instantly? Because in our domestic market, money moves real time, right? So those are the things that has built us up as a continent, where we know how to solve our problems, and we know how to scale it as well. We understand exactly what is required to help us to grow the business. An average small business who is trying to, pay for supplies, they still want to pay on Friday and get their goods on Monday or Tuesday or Wednesday because of Swift. Now, with stablecoin, that can be quicker, that can be faster, that can also not bypass any compliance framework, but real businesses who are in the real sector who need infrastructure to go there. That's what has been our bane of growth as a company.
Thank you very much, Jimmy. Dr. Kaponda, where there's a lot that's been said about dollar-backed stablecoins and the role they play, but when we start looking at local markets and local jurisdictions, how do you view the interplay between non-domestic stablecoins and domestic, say, local currency stablecoins, and how can these local currency stablecoins still be competitive? How can we get to a point where it reflects the current, where the stablecoin market cap reflects the current FX markets from a percentage perspective?
Brilliant. Thank you very much. And I think that's an important question. And I think if you look at it fundamentally, if you go back to Economics 101 and you look at an economy, is, you have the government, you have all your players, you've got the monetary authority, you've got the tax authorities, and government has been voted in by the people. It's a monarch, but government needs to provide goods and services to the people. How do they do that? They collect taxes, they come up with government securities, and they build a reserve for funds for an economy to use. That reserve now budgets for how they want to spend it. In an economy, they'll spend it on, finances. They'll spend it on education. They'll spend it on health. They'll spend it on social services. They'll spend it on defense. As they spend that money, there has to be a fiscal policy. That's where monetary authorities come in. They'll have to agree and say, okay, just like in a home, we have, made this much money. How are we going to spend it to support our family? Yes, we'll take the kids to school. Yes, there might be an emergency. We need some insurance. Somebody might fall sick. We need to go to the hospital. You need some kind of reserve there. Same basic principles. Governments are spending, but they have to spend in a prudent way, and they have to make sure they've got reserves in case an economy gets sick. geopolitics now, they have to budget for defense, they have to budget for social services. And all that is done in a local currency. That local currency, has to interplay with other international currencies. The vanilla currencies now still dominate. How is that exchange rate to that local currency, to a USD? You want to minimize that fluctuation. You don't want that exchange rate to, fluctuate too much, because now if you are an import economy, when you're importing, you have to pay in that USD. And if you're saying now you have a stable coin denominated in USD, how does that interplay? Obviously, for all governments, you want your local currency to be stable. But like I said earlier, monetary authorities have got very specific objectives: sound payments, stable payments, and price and financial systems to be stable. If I go and buy bread today at 20 Rand, I want to go buy bread tomorrow and next week at 20 Rand, then I'll budget properly. Same with an economy. If I'm buying raw materials such as oil at $95 per barrel, I'll plan for an economy and I'll budget for that, and I want that change to be very minimal. That's what you call inflation. You want the rate of change of price to be as stable as possible. And remember, every economy is using their local currency. And if you have that inter-exchange now, the exchange between your local currency and vanilla currencies, you want to minimize that. To come back to now the interplay between stablecoins and the local denominated stablecoins, you want that to be stable. If I have a stablecoin denominated in USD, USD is the global currency, and you find that the fluctuation there is minimal. So you have stability there. You want the same for your local currency, because ultimately, you want to trade in your own currency, because in country, you want that currency to be strong. You want the fluctuation or the exchange rate between your local currency and the foreign currency to be stable. Because if you're budgeting as a country, if you're budgeting as a region, you are basing it on a certain figure, and you're budgeting in your local currency. If that rate of change is too much, your budget is distorted. You're going to budget overruns. Now you can't provide health services for your citizens. Now you can't provide education. You can't do defense. That's important. So the monetary authority will work closely with the Ministry of Finance to bring about that stability. Same with stablecoins. Stablecoin denominated in vanilla currencies, you will find that if it's a basket of currency, there'll be stability there, but you want that stability on the local currency. That's why, monetary authorities have to look at monetary policy and fiscal policy and harmonize, so that the rate of change of price is minimal. And that's how you stabilize that inflation. That's how you stabilize that exchange rate. That's why when you're going back to buy that oil month to month, you don't want that shake. Geopolitics are always there. The price of the barrel goes up. A government needs reserves to make sure they cushion that shock. And I think as monetary authorities, you want those reserves in your local currencies to be stable. Excuse me. To be stable, so that as you are dealing with the global markets, you're dealing in USD, that rate of change is minimized. And that way you find that as you budget and as you execute and as you support your citizenry, that stability is there. Tying it back to now stablecoin versus local currency stability, and how that market and utility has to be maintained. So it's ultimately you would want that stablecoin to be in your local currency, but depending on what is being done by that government to make sure that volatility is maintained, that's what will give you that stability. Remember, stablecoins is you want it pegged to a stable currency. And if the work that is being done on the local currency is not that great and there's volatility, then we still come back to the risks of virtual assets. Bitcoin goes up, goes down. You don't want that. So there has to be that stability first. The rate of change is maintained, and then that's the preferred local currency in terms of stable coins. But I think as monetary authorities, you study what's happening, and then ultimately, depending on where you want your figures to be, if you're comfortable with the rate of change of a local currency, it's preferred you keep those stable coins there. But if that is not resolved yet and there's still volatility, then you have other options for the vanilla currencies. Thank you very much.
Thank you, Doctor. Thank you very much. I'm conscious we're at the 1 hour mark, so I'll do a quick fire round now. One last question to each of our panelists, if that's okay, please, before we hand over to Dr. Segun for closing remarks. Ripple has been deeply committed to bringing digital assets to Africa. Could you just let us know a little bit about the work that Ripple is doing, including with RLUSD in the region, and what we can expect in the month ahead?
Yeah, I mean, Ripple have been extremely active across the African continent for some time now. I think, a couple of weeks ago, we announced a strategic investment in Flutterwave's ongoing Series E round, which for us, me personally, we're, extremely excited about. I think as GB mentioned earlier, embedding RLUSD on the XRP ledger into Flutterwave's, payment rails. So, to meet the demand they're having. So again, that's a great thing that we're very optimistic about how that partnership will continue to flourish. Sticking to stablecoin, first and foremost, we need to get RLUSD available through a number of additional platforms. So we've seen Exchange Vala, South African exchange list it. We've seen some other payment institutions, Yellow Card and Chipper Cash have also listed RLUSD. On the Ripple side, we see, all for the reasons we've all discussed today, huge opportunity across Africa as it relates to stablecoins. And I think it's, uniquely positioned to solve real world problems from trade finance to, financial inclusion. Alongside the institutional use case, the stablecoins bring, we're also seeing a ton of momentum within the humanitarian aid. So if you think to date, traditional humanitarian aid is reactive, but with blockchain, it actually allows you to be proactive. So alongside Mercy Corps and Diva Donate, we've recently run a pilot in Kenya that essentially uses satellite data and smart contracts to trigger automated payments to pastoralists before drought conditions occur. Typically, when this happens, the payments will be slow, opaque, it will happen after the event. So by utilizing RLUSD, we're able to move funds directly into mobile wallets within hours. And the stats are quite staggering here. We saw a 95% reduction in settlement time and a 63% reduction in transaction costs. But the most important thing is ensuring that money gets exactly where it's needed at the time when it's needed the most. So very excited by that. And lastly, I'll just say that, as it relates to digital asset infrastructure, Ripple serves some of the largest banks globally for digital asset custody. Last year, we announced that ABSA are utilizing Ripple's enterprise-grade custody solution to serve their institutional clients. And ultimately, I think with regulation evolving, I do believe the banks, do have the ability to kind of step in and move the needle as it relates to, blockchain and stablecoin adoption. So, on the Ripple side, we're very excited about some future partnership announcements coming up there as well. So lots going on.
Thank you very much, Reese. GB, if I could get back to you, I think Reese touched on this a little bit. He talked about how excited we are at Ripple about the partnership with Flutterwave and the investment. What does the investment, beyond the financial sort of element of it, what does the investment unlock for Flutterwave from a partnership perspective? How does it build for enhanced utility? And then if I could tie it into another question, just to close out, how do you envision the future evolution of stablecoins within the sort of cross-border space?
Thank you so much. So number one, right, Ripple's backing of Flutterwave is a pretty big deal. And let me put it that way, very, very big deal. Number one, it shows the fact that an African player like Flutterwave can work with a global giant like Ripple at scale. That's big. Also, Ripple is an innovator in this space. They've been here before anybody has got in this space. They've built the infrastructure that most of this system are riding on right now. Being able to use their platform to power growth in Florida will be fantastic. And we see Africa as still the biggest growth market, right? In the stablecoin space, even in payment space by itself. So we want to ride that wave with Ripple very, very urgently because we see the opportunity there, the value there, and the impact we can make on SMBs and big, large corporates who are doing business on the continent. We want to drive down the cost of remittances across Africa. We want to drive down how easy it is to move money for SMBs across Africa and globally as well via the Ripple infrastructure, RUS stablecoin, XRP blockchain. That is basically what we're thinking about. That's why this is very key for us as a company and why we're very happy to be backed by Ripple, proudly backed by Ripple, if you ask me. And that for me is very key for. So we see a very big future whereby 1 out of 5 payments in Africa will power by Flutterwave and Ripple, right? Just imagine that in another 10 years. We see that can be a major infrastructure. A lot of merchants today, they want a compliant stablecoin platform. Ripple checks that box all the way to the very end. They want a platform that understands payments, is innovative, yet is also very compliant. And that's where the connection comes from. So for us, we're very excited, looking forward to see a lot more from us in the market from Ripple and Flutterwave in Africa. You start seeing that a lot more now, starting literally this 1st of July. So looking forward to driving more growth with Ripple on the continent.
Thank you, GB. Thank you very much. And then to close us off on the panel, Dr. Kaponda, financial inclusion remains a main driver for a lot of regulators and a lot of governments across the African continent. Briefly, do you see a role for digital assets and stable coins and the advancement of financial inclusion?
Yes, ultimately, and I think just riding off what GB said, driving down the cost of transactions and making sure everybody is part of it. I think that's key. Earlier on in the conversation, we talked about how do we make sure everybody is financially included. Now they don't need a bank account. They just need a unique ID in terms of a phone number. They need a cell tower nearby in the remote of a country somewhere. They need a 2G feature phone. They need a solar panel, and they'll be able to move value from one end of a region to another. That is financial inclusion. It's making sure everybody gets onboarded, making sure everybody can easily pay for that goods and services on a P2P level, on a domestic level. Everybody can buy their essential goods. Everybody can get that basic insurance. I think that's what it means. We've seen that game changer in terms of statistics in Africa. The opportunities are there. Africa is becoming the next generation of digital payments and innovation, and there's no doubt about that. We've seen the practical use cases of stablecoins. If you look at everywhere else in the jurisdiction, some use cases are not practical. It's an issue of you want to modernize payments, you want to future-proof, but in Africa, real use cases are there and lives are being impacted. And I think that's what's critical. In terms of sub-Saharan, we've seen over 70% of payments on mobile financial services. It's innovating around that. The innovation on stablecoins is massive. Remember, like I said, now research we're doing is how do we liken or how do we make sure the strengths we've made on mobile financial services, the mention of M-Pesa in Kenya, mobile financial services are a proven use case in Africa. The concept is more or less the same. You have a backed account with the commercial bank, and there's stability there, one-to-one in terms of a mobile transaction to fiat currency. That's stability. We want to innovate around that. We want to take advantage of the statistics that are in favor in terms of Africa. We want to take advantage of mobile financial services. We want to make sure those partnerships that are stable, partnerships with stablecoin transactions to allow for remittances to come in to be done. but we want the playing field to be clear. We want the consumer to understand, but ultimately we want that value to move efficiently and to allow for a service to be offered within a region, within a jurisdiction, and to allow for those remittances that are coming from outside, and ultimately take advantage of that, use those to build reserves, and ultimately build an Africa that is appealing, build an Africa that allows everybody to be included, that allows everybody to transact seamlessly, effectively, and in the most efficient and stable way. Thank you.
Super. Thank you very much, Doctor. On the Q&A, I've been going through the list. There's a few requests early on for me to make the presentation bigger, and I'm sorry I didn't do that. I just spotted it. We've got a few questions that came through, but I think we answered a lot of them. Jonathan K asked, how do banks get comfortable exchanging stable for fiat? I think we talked a lot about the institutional adoption. Yamisi asked about whether the plan is to make African currency pairs bypass the dollar for cheaper, efficient, and easier payments. I think we've touched on the role that stablecoins can. Dr. Kaponda spoke at length about the role stablecoins can play in that. Yamisi also asked, how do large companies like Ripple and Flutterwave manage liquidity on-ramp? Example, if a maritime company in Nigeria needs to send $30 million to Portugal, B2C seems a bit easy to manage. How are large volumes going to be managed? I'll ask maybe GB if you're open to it. Flutterwave probably manages large volumes. Is there a pathway to operationally achieve that? Has it been an easy journey or is it very difficult?
I think we've built both sides of the trade, both left and right? We've made it easier for us to manage the liquidity. You have to build that in. You have to build that in. That's way it can work at scale, in my opinion. So I'm open to partnering with anybody who wants to leverage our rails to make that happen. Both Flutterwave and USD are available to make that easy and quickly across board. And we have unlimited USD liquidity. So however you want to go, we're ready for that. Yeah.
Perfect. Thank you very much, GB. And then the last question we've got in was
just to add up on what PJ was saying. So in terms of remittances and international trade, the value of a transaction is important, because even from monetary authorities, we look at how much value is moving, how much risk is there. So the risk-based, tier-based model still works the same traditional way. If you find that the threshold is $1 billion, look at that a little bit closely. Make sure the source and destination is clearly defined. Probably want to make sure you have a little bit more of KYC. Know where it's coming from, know where it's going. If there's anything wrong with that transaction, how do you make sure you straighten that? So risk-based, tier-based, the same way we do traditional payments should apply. Thank you.
Thank you, Doctor. The last question is, what is the realistic settlement time door to door? Ideally, Obed, it's instant. That's what we're all dreaming of, and hopefully we'll be able to achieve it one day. But on that note, I think I'm going to close off the panel discussion for today. My name was Abdullah Mukallid. I lead the policy function for Ripple for Middle East and Africa. So it's been a pleasure to talk to you, GB, Dr. Kaponda, and Reese. Thank you very much for your time today. And thank you for everyone who attended. What I'll do is I'll hand over to Dr. Segun Aina to take us home, and please provide closing remarks on behalf of the Africa Fintech Network.
So thank you very much, Abdallah. And apologies for not joining earlier on. I want to thank everyone for being here on this call, GB, Reke, Dodo Kombe, and everyone that has attended. I'm quite pleased with the partnership that we've had with Ripple over the past 3 years, which have continued to convey meaningful dialogues such as this. Africa, as you can see from what has happened today, Africa is not only embracing stablecoins, it is helping to define their future. So this webinar really is really very timely and strategic, as I provided a platform for us to examine how African innovators, financial institutions, and regulators can harness the benefits of stablecoins while managing the attendant risks. Let me say here that our conversation today is also closely linked to another strategic priority of the Africa Fintech Network. That is the development of a Pan-African Fintech license passporting framework. As innovators build cross-border solutions, whether in stablecoins, payments, or digital financial services more broadly, they are constrained by fragmented regulatory requirements, duplicative licensing processes, and uneven market entry conditions. So therefore, a well-designed passporting regime can help address these frictions by enabling qualified fintechs to operate across multiple African countries under harmonized or mutually recognized standards, while still respecting national sovereignty and regulatory mandates. So stablecoins and licensed passporting are in many ways two sides of the same coin. One speaks to the emergence of new digital instruments and rails for value transfer. The other speaks to the regulatory and market architecture needed to allow such innovations to scale responsibly across borders. If Africa is therefore to lead the stablecoin shift, we must also lead in building coherent regional frameworks that support safe experimentation, protect users, and give regulators the visibility and tools they need. As Africa Fintech Network, our mission is to connect national fintech associations, foster collaboration between the public and private sectors, and support an enabling environment for responsible innovation across the continent. By coupling dialogue on stablecoins with our work on fintech license passporting, we aim to ensure that Africa digital finance future is not only innovative, but also integrated, inclusive, and resilient. So I want to thank you very much for what we have had today, very informative, and I believe that giving us some action plans as to what we need to do. And Africa Fintech Network is poised to partner with Ripples, again, with regulators, with Flutterwave, and other leading players to make sure that we push this forward in terms of all the things that have been said. Thank you very much for this opportunity for us to be part of organizing this very, very interesting webinar. Thank you.
Thank you, Dr. Segun. For two questions that arrived in, how to communicate with the team, I think the gentlemen on the panel are all on LinkedIn, and we'll be sharing the white paper that was discussed on the presentation. So hopefully that's an avenue to reach out. And then, yes, presentation and recording, I'm sure Africa Fintech Network will follow up on that. Again, thank you, everyone, and have a good evening.
Thank you very much.
Thank you, everyone. Thank you. Have a good evening.